What is up guys, my name is Ignas, welcome back to the channel. Last week we've checked into the world's largest coffeehouse chain, and their dividend yield at the time was around 20% undervalued. But in the last 5 days the stock managed to go even lower, from $85 to $80.59 per share, lower for another 6.86%. This means that the dividend yield is now even more higher, currently at 2.43%. So should we be starting a position in Starbucks right now? To answer that question, we will be taking a deeper look. First, we'll check into financials and fundamental ratios. After that, what analysts think the stock should be trading in 1 year. Then what Superinvestors and insiders are doing with the name. And lastly, we'll take a look into the technicals of the price chart. Maybe then we will get a better idea if it's worth adding into SBUX right now. First, we'll take revenue history of the last 5 years. So back in 2016, they were bringing in $21 billion on the trailing 12 months. Then in a year in 2017, it increased to $22.7 billion. With 2018, we had another increase to $25.3 billion. There was a bit of a peak by the end of 2019, where revenue on the trailing 12 months was almost at $27 billion. But then we had this slump in 2020, where revenue went lower to $23 billion, but that bounced back nicely, as with the latest quarter of 2021, we are back up on revenue at $30.3 billion. So second quarter of 2020 was the worst, with Starbucks bringing in $4.2 billion on the quarter, that being 38% lower year over year, but exactly 4 quarters after that, revenue went way higher to $7.5 billion, so a year over year increase of 77.57%. And the next 2 quarters after that were both great, over $8 billion each. Second metric we're taking a look into is the price to earnings ratio. So back in 2017, price to earnings was at 26.47. Then in a year with 2018, as the price went flat and earnings increased, price to earnings went a bit lower to 17.64. With the price going higher in 2019, price to earnings also went up to 30.2. There was this slump in 2020, with the price going a bit lower, so price to earnings down to 22.62. After that, the price was surging in 2021, but earnings were really low, so price to earnings went over 100 to 124.87. But then we had the price selling off, and earnings nicely coming back, so price to earnings is now going lower to 22.03. So as the price was going higher in 2020, and we saw earnings decreasing, we had the price to earnings surging to the highs of 180.49, but if we want to find a similar PE that we have now, we need to go 4 years back, where we had the price to earnings closer to or under 20. Quite a decent opportunity going back to the PE of 4 years ago. Now as per usual, the third step is the shares outstanding, and the 5-year history looks quite decent. In 2016 they had 1.47 billion of shares outstanding, then in a year it decreased to 1.44 billion shares, down 2.45% year over year. The largest decrease was in 2018, with the shares outstanding going to 1.25 billion, 12.68% down. Then in 2019 we had a decrease to 1.19 billion shares, 2020 1.18 billion, and with the latest quarter of 2021, we now have the shares outstanding at 1.177 billion. So the chart suggests that Starbucks in 5 years bought back around 294 million shares, which at the current price of $80 per share would be a huge $23.5 billion. So we could say that they have been consistently buying back shares, but unfortunately this direction will not be lasting anymore. Howard Schultz, Starbucks CEO, suspends their share buyback program. So Starbucks is currently pausing on their share buybacks. As Schultz writes, starting immediately we are suspending our share repurchasing program. This decision will allow us to invest more into our people and our stores, the only way to create long-term value for all stakeholders. So it appears that they will be reinvesting back into the company, but unfortunately they won't be buying back their shares anymore, which as we saw was one of the key factors pushing the stock higher. Now let's check the dividends. So back in 2016, 2017 they were paying 86 cents per share with the dividend yield of 1.55%. Then with 2018 the payout increased to $1.07, but with the price moving sideways, the yield went up to 2%. In 2019, as the payout decreased a bit and the price surged to over $90, the dividend yield bottomed at 1.13%. Then in 2020 the payouts came back up, so the yield went higher to over 2% at 2.15, and with the price surging in 2021, and even though the payout went up to $1.77, that was not enough, so the yield went lower to 1.54%. But as the payout continues to go up, now at $1.87 per share, and the price selling off this year, the dividend yield is now going up, currently at 2.29%. So there was the surge in yield back in 2018 at 2.42%, but it appears that right now we are pretty much at the same levels with a yield of 2.3%. Let's take a deeper look into it in my Google Sheets watch list. So here we have the Starbucks tab and the dividend yield history of the last 5 years, where we can find that on average in 5 years the dividend yield was at 1.8%. The only time the yield was better than now was back in 2018, where with 2.42% it was higher than the average yield for 34.8%. But right now with the dividend yield of 2.4%, we are almost at the same levels of 2018, currently higher than the average for 33.69%. Definitely one of the best times to buy in of those last 5 years. If you would be interested in doing a similar analysis yourself, you are able to get access to this Google Sheets document by following the second link at the top of the description. That is also a good way to support the channel along the way. Otherwise, feel free to leave a ticker symbol in a comment below, and I'll consider adding it into my watch list for a deeper look. So we looked into the history, but how about expectations? Where should the stock be trading next year? Here we have results of 31 price target of analysts. The targets range from the lows of $84 to the highs of $136 per share. The average out of these targets is $112.26, and currently the stock is trading at $80.63. This means that on average, analysts suggest that next year Starbucks should be trading higher for 39.2%. Quite a decent opportunity so far. Let's take another angle. These are analysts' earnings estimates for next year, and out of 34 analysts, on average they predict that Starbucks will be bringing $3.88 per share. If we assume that price to earnings stays the same for 2023, then out of earnings, analysts suggest that next year the stock should go up by 16.9%. So all in all, there seems to be quite an opportunity, with analysts predicting for next year for the stock to go up from 17 to 39%. Now let us move towards Superinvestors. 5 of them have been adding recently, with 1 new position opened, while 2 of the 8 reduced on their positions. It seems that the largest move was from Fundsmith, where they added 7.74% on their position and are now holding 11.5 million shares, valued at $1.3 billion. And that is quite a sizable position, taking up 3.3% of their whole portfolio. Now at first glance, there was a sizable reduction of almost 16% from First Eagle Investment Management, but it appears they are only holding almost 32,000 shares, which is now valued at $3.7 million. So that is a way smaller position, and the second smallest out of these 8 holders. But it looks like large positions, like Jensen Investment Management and Poland Capital Management, have been net buyers of the stock. Now there is a bit of a concern with insiders. In the last 6 months, insiders made 0 long trades, but managed to do 5 sells, valued at over $35 million. So we could think that as the stock was moving lower, insiders were trying to sell out, but that is not entirely the case. So as we checked earlier, in the last 6 months, insiders made 5 sells for $35 million, but they didn't do that with this year's sell-off. The last sell that they've made was December 10th of 2021. Now let's move to the chart to check how that looks. So this is the stock's activity of the last 6 months, and the stock has been moving sideways for the first 3 months and then going lower for the next 3. But insiders managed to make the last sell on December 10th. so they were not at all selling into weakness. Let's open the 5-year chart and again find December 10th of 2021. So it seems that insiders managed to place their last sell when Starbucks was still close to those all-time highs at $126 per share, and not at all selling into this year's weakness. I won't be much surprised if we will be seeing some insider buying anytime soon. For the last part, let's take a look into the chart. So the stock started selling off in the beginning of the year and has been going lower ever since. There was this bullish crossover in the lines of the MACD just by the end of January, but that didn't help much as the stock still went lower from there. Second MACD crossover was in the middle of March, and that was a bit more promising as the stock went from the lows of $78.92 to the highs of $92.63. But that was when it reached the 50-day moving average from the lower side. It seems to have acted as a good resistance, and we got more selling pressure from there. As the stock was moving lower, on April 5th I started one long trade in it on eToro. But so far it's not doing that well, as the stock still went lower for the week, now trading at just over $80 per share. So it's not yet clear where the bottom will be. We recently had it at just under $80 per share, and we are now pretty much right there too. The distance between the MACD lines is still on the increase after that recent bearish crossover. And with relative strength index going lower, we are now very close to oversold at just over 30. But we already had the moving average crossovers, with the latest one being 200-day moving average going under the 300-day one, so at least we won't be getting that downward pressure anymore. So we looked into every step, and now let's make a quick recap of what we found. Revenue has been consistently increasing. There was a slump in 2020, but we are now way over the pre-pandemic highs. The recent sell-off meant that the price to earnings is going lower, and we are almost at the 5-year lows, back to the levels we saw in 2018. Starbucks have been heavily buying back their own shares, but unfortunately they are not planning on doing that anymore, as they are now halting their stock buyback program. But the recent sell-off also means that their dividend yield percentage has been increasing, and it is now 33.7% over their 5-year average. For the next year, analysts are predicting growth, as they expect for the share price to go up from 17 to 39%. Superinvestors have been net buyers of the stock, and even though in the last 6 months insiders have only been selling, they only did that in 2021, where the price was at or close to its all-time highs. Now the chart suggests that we could go lower, as we just had the bearish MACD crossover, relative strength index is almost at oversold, and the 50-day moving average recently acted as a resistance. But we also just had the 200-day moving average crossing under the 300 one, meaning that the bearish moving average crossovers are in. We could be close to a bottom, so it may be worth starting a position at around $80 per share. And that was it. Make sure to support the channel and leave a thumbs up under the video. What do you think? Is it worth buying Starbucks right now? Share your stance on the stock in a comment below. If you would be interested in getting access to my dividend investing watchlist, then consider memberships. By becoming a member, you will get access to Discord, where I share the stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on another name, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.